Good morning, everyone. This is Hadjikyriacos, analyst at IronFX, bringing you the morning comment for the 2nd of December. Politics takes center stage again. Italian referendum. The next political risk event that is likely to rattle financial markets is the Italian constitutional referendum on Sunday. Italy's Prime Minister Renzi is calling his citizens to decide on constitutional changes aimed at accelerating the pace of reforms and making Italian governments more stable, primarily by stripping the Senate of many of its powers and transferring them to the government. If the Italian people decline Renzi's proposals, he pledged to step down. So in such a case, political uncertainty is likely to mount and generate fresh questions regarding the nation's stability and, by extension, the Eurozone's sustainability. If indeed Renzi quits, one of the prominent parties that could rise to power is the Five Star Movement, a political party that is considered anti-establishment and has in the past advocated for holding a referendum on the euro. This is likely to impact confidence in the Italian economy and in the nation's troubled banking system, something that could negatively impact the euro, as well as the Italian and Eurozone banking shares. Such an outcome is possible to be the trigger for EUR-USD to move back below the 106.60 barrier, and if the bears are strong enough, they may be able to push the rate lower towards the 105.60 hurdle again. If, on the other hand, Renzi remains in place, the status quo would be more or less maintained, which implies that uncertainty would be much less. Therefore, any adverse market reaction in the euro and bank equities could be smaller. Now, in case Italians accept these reforms, confidence over increasing stability in Eurozone's third largest economy is likely to rise. This could spell good news for the bloc and the common currency. A clear break in EUR-USD above 107.50 may set the stage for larger bullish extensions and aim for the key zone of 108. NFP to seal the deal for a December Fed hike. Today, the main event will be the US employment report for November. Non-farm payrolls are expected to have risen by 174,000, more than October's 161,000. The fact that the ADP employment change for November came at 216,000, significantly above its forecast, and the overall low initial jobless claims throughout the month, suggests that we could even see a higher than expected NFP figure. The unemployment rate is forecast to have remained unchanged at 4.9%, while average hourly earnings are expected to have slowed on a monthly basis. Despite the slowdown in earnings, the forecasts point to another month of solid employment gains overall, which may seal the case for a Fed hike at the upcoming gathering in December and thereby cause the dollar to add to its gains. The pound surges on soft Brexit comments. The British pound surged yesterday following comments from UK Brexit Minister David Davis and the head of the Eurogroup, Jerome Dijsselbloem. The initial spike higher in cable came from Davis's remarks, who told lawmakers that Britain would consider making payments to the EU after it leaves, in order to achieve the best possible access to the bloc's markets. These comments may have diminished somewhat the likelihood for a hard Brexit and caused cable to break above two resistance now turned into support barriers in a row, the 1.2530 level and subsequently the 12570 zone. Dijsselbloem added fuel to the rally by indicating that the EU may be able to find ways for the UK to access the EU market even post-Brexit. This triggered larger bullish extensions in cable, with the rate hitting resistance slightly above the 126.80 hurdle before retreating somewhat. Given these soft Brexit signals and that the short-term trend of cable appears to be positive, we would expect the rate to continue higher and test the 126.80 zone again. A clear break of that level could initially aim for the 127.60 barrier. However, given that we have the US employment report today and expectations are for another month of solid jobs gains, we could see some further pullback in the pair before the next leg higher. As for the rest of today's highlights, during the European Day, the UK construction PMI for November is due out and expectations are for a modest decline in the index. Coming on top of a similar decline in the manufacturing PMI for the month, this could diminish some optimism over the UK's economic performance after the referendum and may thereby hurt the pound somewhat. From Canada, we also get November's employment data. The forecast is for the unemployment rate to have held steady, but for the net change in employment to have turned negative. Given that the US and Canadian jobs reports are released at the same time, and the former is expected to be solid while the latter soft, USD CAD could surge on the news. We have two speakers on today's agenda, Cleveland Fed President Loretta Mester and Dallas Fed President Robert Kaplan. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Hadjikyriacos, analyst at IronFX, wishing you solid trading.